it is late Monday night. Late for me. Don't normally even check the charts at this time of night, but happen to glance at them, and our position has gotten in the money. So I'm going to trim on Monday night and then we'll see what happens going into Tuesday. But I thought I would at least record the trim because, it's for you and you need to see it. So this position right here is 51 pips in the money right now, 4,375 units. And we're out of the money over here, 302 pips. So up here on the trim the hedge calculator, I've got 50 pips in the money and we're out of the money, 305 pips. So we're going to trim this 538 units. That's going to be a partial close. Let's go 538 right here. And this bad boy will be a full close. One thing I always check is the pip spread. If you're trading outside of regular hours, just make sure you're not getting clipped by some crazy pip spread. 1.8, that's normal. So I'm going to close this guy right there and partially close this one, which leaves us 3,837 units on the short side, nothing on the long side. What we need to do is protect that hedge going into the night. Whether this sells off or continues on its way, I really don't know, but I'm going to give it a little bit of breathing room in case it kind of bounces around here and then pulls back off. It has ran up pretty hard. So we closed that position at 1.38019. So let's put a line right there. That's what we would like to get back below. And then about 40 pips up, 30 pips below that or right at that, I'm going to put a buy stop for 3,837 units. So that'll be our buy stop. That'll protect us. But if it happens to turn around and roll off, then maybe we can, squeak in a little squeezer on that bad boy. Tuesday morning, sat on this all night. Now the market has pulled off just a little bit. So the bottom of this candle is about right there. So I'm going to squeeze this buy stop to right there. Kind of follow it down. If it rebounds and bounces up, then we've at least got a little bit of a squeeze, but we're keeping about a 30 pip breathing room. 40 from the bottom. It's about 30 right now because it has pulled back just a little bit. So what would be really nice if this thing just really sold off. All right, market is cruising up. So I'm going to put a trailing stop on this guy. And I'm going to put it about 15 pips away from the market. That's the goal. That way that can just kind of follow that up. If it's going to keep on grinding, we'll just keep riding that pony just like it is. Yeah, it just keeps adjusting and going. So perfect. Exactly what we want it to do. If it happens to tip over and flush, then we'll pick up that trailing stop and we'll move on from there. All right, this is starting to pull back. Our trailing stop's about 4 pips away from picking up. So let's start doing some planning. We've got 3,837 units. Probably be in the money about 16 pips when we get there. And this will be out of the money about 330. So I had to put 140 unit trim on that little guy. Look at that, about 3 pips away. I might hit that here. It's definitely pulling back off. Oh yeah, there we go. So that closed. So let's partially close this guy. 140 units. So now we're down to 36.97 on the short side, nothing on the long side. So we close that position at 1.38301. And now what we want to do is let that go. Let's put ourselves a buy stop order up here. This is our backstop. And this is for 36.97 now. And the idea behind that is if this thing will come down, we can squeeze that. See if we can't pick up a little bit on the squeezer. Market is slipping just a little bit, which gives us an opportunity to squeeze our hedge. I'm going to move this down so we can visually see it. That's where the market's at right now. And if we wanted to maintain a 40 pip breathing room, then what we'll do is just squeeze this right down on top of that and then hit modify. So now we're just inching our way. Now, if the market were to just tip over and fall, then we just inch that all the way down, little bit by little bit, called squeezing the hedge. So we're not adding anything, we're just unbalanced and letting this 3,697 units do the work of pulling the market down. It's that time again. Time to dive into the comment section. Let's see what we got to work with today. All right, this one seems to be like a regular, popular comment. One person wrote, "What is the minimum capital to start using this hedging strategy?" And here's the thing, this is so much up to the trader. You know, some people have such an aggressive personality that they're going to trade max units, whatever their broker will allow them to get them. I'm going to use a lot less of my capital and allow for a lot more drawdown. And I think that's the point. So let's just do some rough chatting about it. If you had, like this account, $1,000 and you had 500 in each account, somewhere you got to decide, how many units am I going to trade? I personally thought around 12,500 units would be my max unit size, but I rarely am holding 12,500 units. Right now, I'm only holding 3,697 units. And for some, that might be like not aggressive enough. You might be thinking to yourself, dude, you're just sitting on the sidelines. You're not doing anything. And that might be true, but that's my style. That's what I want to do. So that's my max unit share. And that's based off of my risk tolerance, my leverage, how much cash I have to trade. It's really up to you on how much cash you're willing to put into your trading account. Again, I would definitely recommend everybody start small. Don't go crazy, lose all of your money, because you're going to lose some money along the way. The main thing I would point out on this, you're going to have drawdown. You're going to have positions that's 3,697 units. So this is 25% of my max unit size I'm willing to trade. And it's out of the money 322 pips. I'm showing you guys this as if there was no secrets. At any time, you can look down here and see what the values of my accounts are. That's why it's there. So my long account, which I'm not holding any position, has $573 in it now. And available margin is 573. On my short account, I have $315 of available margin. If I were to load up and use more of my max shares, I would transfer some money from my long account to my short account to balance those out. Right now, I feel like I have plenty of breathing room. I'm still just trimming the hedge down, waiting for an opportunity. So I'm not necessarily worried about transferring money from my long account to my short account. But right now, all the profits have gone into the long account and the drawdown has gone into the short account. So right now we're up $73 and I'm down 87 on open drawdown. There's like that ebbs and flow, that back and forth. Right now, if this would continue to flush and come down, we're just going to eat up on that open profit until we hit our buy stop. The idea is you have to have margin available for these positions that are out of the money to work. All right, let's see what else we got cooking. One person wrote, "Doesn't it take too much time to get out of the drawdown?" Dude, it's forever. It's basically an eternal trading strategy. It's the long game. It's definitely not Lambos by the weekend. I mean, it is literally going to take forever. Forever. If you don't have forever, this may not be for you. One person wrote, "My question is this, for example, if I knew kind of for sure that the market would go up," hold on a sec, if you knew kind of for sure, ooh, that's nice. I have a hedge down and no protection for up. You could say, but hedge early. So that's true, hedge early. So he's holding a short position, but he thinks the market's going to go up. So he's holding this position. Do you wait until it hits your buy stop or do you hedge early? I would say if you knew kind of for sure, hedge early. Okay. So that's answering question number one. But I would like to make some money out of it. Can I increase the amount I put for the upside and maybe protect the extra volume I entered with a buy sell stop? The answer is yes. That's hedging to capacity. So if you knew kind of for sure and you were only holding a short position, you can hedge early. Now you can hedge to balance, so you can open a position of equal share size and balance and let the market move up. Totally fine. Now, if you had extra units, extra capacity, and let's say you were holding 1,000 units on the bottom side and you had 5,000 units available, well, you could buy 5,000 units on the long side, and 5,000 units is going to eat up a lot of 1,000 units if you kind of knew for sure the market was going to go up. But I do like what you pointed out. If you had 1,000 here and you went long with 5,000, make sure you protect it with a sell stop with the other 4,000. If not, you have a really unbalanced hedge going long. And even though you knew kinda for sure, it's still kinda. It could just be maybe not for sure. For sure. Does that for sure make sense? For sure.